Hi, everyone. Thanks for joining us. I think I'm looking at the participants here, and I think we've started to get a pretty good group of folks. So we can get started here. But I wanted to start. So obviously, the title of our webinar today is Sprint or Marathon: Evaluating the US Crypto ETF Race. So we'll talk a bit about the potential for a spot Bitcoin ETF in the US, as well as a Ether ETF. And we've got two great guests with us today. And I do want to, before I get to introducing them, I do want to get through just a couple very quick administrative things. One is just to remind listeners that this webinar is for educational purposes only, and for any product-specific information, they should refer to the appropriate prospectus. And the other thing I'll mention now, and hopefully remind everyone later in the webinar, but we will save some time at the end for questions, so please feel free throughout to submit your questions, and we'll have some time blocked off at the end. So by quick introduction, I'm Gerry O'Shea. I'm head of global insights at Hashdex. And I'm joined by two people I think that have probably been following the spot Bitcoin saga in the US, maybe closer than most others. So Samir Kerbage is the CIO here at Hashdex, and Cinthia Murphy is the director of research at the ETF think tank. And before we get into the questions, I know we've done a lot of partnering with the ETF think tank. It's a great organization, but I do want to give you, Cinthia, for people that are listening that might not be familiar with the work you all do, I was hoping maybe you could just give a little bit of an overview on the think tank and the work you're doing.
Thanks, Gerry. I'm excited to be here today. The ETF think tank it's a bit of a unique beast, if you will. We're in the research business, the content business, all related to ETFs, but we're also part of Tidal Financial Group, which is a white label platform. So, that side of the business helps people bring ETFs to market. On the ETF think tank, where I lead research, we're, agnostic, independent, all those good things when it comes to really understanding the ETF wrapper. But we are owned by the white label business. So we write, we research, we have data analytic tools, we do a lot of video work, all that good stuff, primarily for financial advisors who are looking to understand the ETF market.
Awesome. So obviously very, very important. I know obviously you guys have spent a lot of time thinking about the crypto ETF landscape. And I think maybe if I can start by asking you the first question to sort of level set, but in terms of the latest developments with regards to a Bitcoin or having a spot Bitcoin ETF in the US, obviously the BlackRock news in June was pretty significant, and I think altered the landscape in terms of the promise of this spot ETF one day happening. But I just kind of would be interested in your sort of laying out exactly where we stand in terms of activity around the spot ETF, because I know there's one of the things I think we noted in the note to this webinar is we try to separate fact from fiction, and I think there's a lot of fiction out there about when and how this product will be approved. So if you wouldn't mind doing that, I think it'd be a good place to start.
Okay, so the first fiction we're going to demystify is the sprint or marathon. It's really a crawl. We're barely crawling in this. We've been at this for 10 years now, trying to get a Bitcoin ETF approved in the US. And we still look like we're in no rush to get that done. It's at this point, it's kind of mind-boggling how this is going down. But I think, from a matter of news or what's the latest developments in the space, I think since GBTC won that lawsuit, which, we were all cheering for it to happen. It did happen. But basically just is this continued exercise of putting regulators in a corner of taking away their arguments against a spot Bitcoin ETF approval. And that lawsuit was one step in that direction. To your point, when BlackRock came in, BlackRock, Larry Fink, has been known to be very, anti-crypto for years and take a grand stance about it. And then all of a sudden, Bitcoin is the future, and BlackRock which is a $9 trillion asset manager, the biggest in the world, files for a spot Bitcoin ETF, everybody, stopped and took notice because it just added all this weight to the conversation. But we're still in the same game of delays, procrastinations, and, search for answers. The SEC remains stuck on their concern about price manipulation, about fraud, about, surveillance, and really just a regulatory oversight of the space that hasn't changed. But this week specifically has been kind of an exciting week. We had one other TradFi giant enter the space, Franklin Templeton. So they just filed for a spot Bitcoin ETF this week. It's an interesting filing. And we had yesterday, I saw just yesterday, a letter from Congress to, Gensler saying, hey, it's time, you have to approve this immediately. ETFs are a good wrapper for investor protection. That's what the SEC is about, investor protection. So let's get this done. I mean, unfortunately, the letter was only signed by 4 Congress people. I think we need a lot more Congress people in the signing to really give this weight. But it was kind of a cool move. Like, okay, everyone is saying it's time to get this done. But we're still in the delay and waiting mode for now.
Yeah, I know Chair Gensler is testifying this morning in front of the House Financial Services Committee, so I'm sure he'll be getting several very direct questions about the status of the spot ETF. And I know just from right before we got on the call, I know Patrick McHenry, the chair of the committee, had laid out a pretty intense, I think, opening statement in terms of what the SEC has done here. So, Samir, I think Cinthia mentioned price manipulation, some other things being concerns of the SEC. But can you talk a little bit about what the SEC's arguments have really been so far in terms of why they, it's been over a decade. Why do we not have a spot Bitcoin ETF in the US?
No, sure. So first of all, I can be quite controversial when I tend to empathize with the regulator. Think about about this. The SEC is the regulator of the largest capital market in the world. What they do have consequences everywhere. This type of process that they're going through, which is called an 19b-4, is a rule change on the exchange rules, right? So it's how the exchange function. Any change on the exchange rules can have consequences, and they create precedents for future, right? So what they have been doing so far is really being very much attached to the precedents around commodity ETFs, especially gold ETF, and they're trying as much as they can to not go away from that precedent. And this is, I would say in principle, this is what they're trying to do. And they're very concerned about price manipulation and about having a surveillance sharing agreement with a regulated market of significant size. So this is the core issue that the SEC has. So Bitcoin markets are very fragmented, right? So you can trade Bitcoin 24/7 in I would say more than 500 venues probably. Most of those venues, I'll say the large majority, are not regulated, or at least they can be regulated somehow for some agencies, but they are not regulated as a national securities exchange in the US is, as a federal regulator in the US would require, with protections that would require the exchange to do price surveillance, to have measures to mitigate price manipulations and fraud, right? So this is the state of the spot exchanges right now. And historically, when that happens with commodities, that's the case with most of the commodities, by the way. It's the case for oil, for gold, for agricultural commodities. They normally don't have a regulated spot market. So in those cases, what the SEC has accepted in the past is a surveillance sharing agreement with a regulated futures market that is of significant size. So when the futures market is proved to be the dominant price formation mechanism for that ETF, for that commodity, then that futures market can be used as the regulated market, and then the surveillance share agreement will apply. So this is the standard that they have been applying for spot Bitcoin. They only want to allow a spot Bitcoin ETF when the futures market on CME is significant enough. And this is happening, this is growing. Like the CME market, the Bitcoin futures market on CME has been growing over the last few years. But there's still a lot of controversy when you look at the data, if it is big enough for an ETF, right? So of course, like all the issuers are trying to say to the SEC that CME is large enough to accommodate a spot ETF, and the SEC has been very resistant around this. And then came Grayscale, like after the SEC decided to approve Bitcoin futures ETFs that are based on CME, but reject the spot ETF. They sued the agency, stating that those products are essentially very correlated. So they should have applied the same metrics. So now we had the GBTC lawsuit that eventually, like, the SEC lost, and we're waiting to see what are going to be the consequences. But in terms of like the main reason to reject is that Bitcoin, like spot Bitcoin market, is not regulated as a national security exchange is, but that's not a big deal because other commodities are the same. But they think that the CME futures market is still not mature enough for a spot product.
Yeah, and I know they most recently, I think it was yesterday, that they punted on a decision for one of the Bitcoin spot ETF applications out there, the ARC 21 shares application. I think people are anticipating that'll be the case for others that are coming up in the near term. But I do think it might make sense, Samir, to talk. We have a horse in this race, so to speak, and I do think that our Hashdex Bitcoin Futures ETF, which trades under the ticker DeFi, the structure of that product, I think being a 33 Act registered as opposed to 40 Act is unique, and I was hoping maybe you could talk a little bit about that and how it may potentially address any concerns the SEC has with regards to market manipulation specifically.
Yeah, no, definitely. So the Hashdex Bitcoin Futures ETF is a product that is already trading in the US on NYSE. The ticker is DeFi, and this product is the first and only US ETF that invests in Bitcoin futures and also has a 33 Act structure. And that means that this product can hold commodities as well, right? So 33 Act is the structure that a spot ETF would have, right? So the other Bitcoin futures ETF that are available in the US right now, they are all under the 40 Act rule, which is really designed for securities and for investment companies. So really does not contemplate a spot Bitcoin. And this type of structure allows us to eventually work with the SEC to change the investment strategy of the fund to allow it to hold spot as well, and eventually be converted to a full-blown spot ETF. And this is basically, this is what we've been doing. So like it was public some 3 weeks ago that NYSE have filed an 19B4 related to a product asking for approval of like a conversion to spot. And what we try to provide the SEC in that application is something very new that no other issues have tried before, is really like to work with the precedents that the SEC already have, which is like the spot commodities using futures as a regulated market of significant size, but also the precedent that they approved Bitcoin futures ETFs. So we're trying to, as much as we can, rely on CME for price formation, for trading and settlement of spot Bitcoin, and all like the informations that the fund would use, so that we could classify the CME as the regulated market of significant size in relation to that product. So there's a lot of nuances on that application. It's a very technical work that our team have been working here for a few months to really nail down. It was a result of like a deep study into the previous rejections orders on the SEC, and really trying to design a structure that would give comfort for the SEC to approve. And that's why when you look at some analysts out there, they say that our application is hard to deny, right? So it's completely different from all the other applicants. So at least if the SEC rejects that, we're going to learn new things. We're going to progress with the discussions with the regulators. Those discussions are already happening. So we're very excited about, being in this race or this marathon or this crawling. I don't know.
Gerry, if I may, what I think is so cool about the way Hashdex, you guys in a DeFi product, is tackling some of the concerns, the price manipulation and the market size concern the SEC has, this concept of this blended portfolio, futures and spot, and the way all the price discovery and the acquisition of the spot Bitcoin is done through the CME, as opposed to everybody else in this race, which is, doing through Coinbase, which is an unregulated exchange. So the concept of you working with an existing already regulated exchange, the CME, versus Coinbase, which is unregulated, I thought it was just a very, very elegant solution to a problem that has been really difficult to solve. And in truth is, when it comes to somebody like Coinbase, because Bitcoin is considered a commodity, some of the other digital currencies are considered securities, there is really no governing body today that can oversee and fully regulate Coinbase. Is it the SEC? Is it the CFTC? There really is almost like we need a new entity, a digital regulator, something that doesn't exist. And it's going to require some act of Congress to make some kind of regulatory body to fully regulate an exchange like Coinbase. So I just wanted to highlight that because the whole regulated exchange is a huge hurdle here to this approval process. And the way you guys have approached that by circumventing that whole discussion and working exclusively with a regulated exchange, is brilliant, really.
That's a pretty good segue, I think, to talk about what the impact of a spot Bitcoin ETF might be. And I think like our audience, typically a mix of investors with kind of very people interested in crypto, and so there might be some on the call that don't necessarily appreciate what the impact of this would be. And again, kind of getting back to the theme of separating fact from fiction, I think there's a lot of speculation out there about what the impact would be. So Cinthia, do you want to talk maybe for a few minutes about the if a spot Bitcoin ETF is approved, what does this actually mean?
I think the most obvious impact is adoption. If you think about who is accessing markets through ETFs, you're talking about the entire advisory channel, pretty much. I mean, the majority of advisors use ETFs for clients and institutions. A lot of institutions actually are mandated to use, mostly 40 Act ETFs, but basically, regulated investment vehicles that they can depend on. So you all of a sudden, you're opening access to a whole group out there that is not going to go, buy digital assets directly from an exchange. And that channel is huge. So, the speculation now is, what does that number look like? Just yesterday, I was reading in Blockworks, I think Bernstein came out with this projection that we're talking about in the Bitcoin market alone, it can be up tenfold in 5 years once you have ETFs out there. We're talking about $50 billion right out of the gate. I mean, the estimates are all over the place, but the idea is that today, if you look at different surveys, and one of the conversations we've had before this was the advisory channel specifically. There were surveys last year from ETF Trends, NASDAQ had a survey out, like 96% of advisors today are fielding questions from clients on crypto. But at least 75% of them saying they're not allocating to it because they don't have a spot Bitcoin ETF. So there's a huge, pent up demand there for access, and ETFs are about access. That's the beauty of the ETF wrapper. It is about access. And when you think about, what ETFs succeed, which ones really make a difference are the ones that solve an investor problem. And what is the main investor problem today in the US, in the advisory channel, in the institutional channel is access. And a spot Bitcoin ETF would deliver that. in the most direct way possible. Futures ETFs deliver that today, but is not your most direct vector into the crypto assets. So I think it would be a huge demand story for sure.
Yeah, and I might shift gears slightly here a bit, not necessarily away from the ETF discussion, but Samir, we have a presence in Latin America, Europe, and the US, which I think gives us a unique perspective on kind of how these debates have played out in other countries and how that might inform what's going on in the US. So I guess maybe a very high level question, but is the US, do you feel that the US continues to be kind of at risk of really falling behind in terms of giving investors this type of access, and maybe even more broadly than that, than really building out a strong crypto ecosystem? And so I'd be interested in your thoughts on the impact that you think this kind of lack of regulatory activity on crypto related issues is hurting the US.
Yeah, no, definitely. So crypto is a new technology. There are like thousands and possibly millions of like new jobs to be created related to crypto and blockchain technology. And the stance that the US government has been posing so far is to really repel those innovations, repel those entrepreneurs, and repel those jobs out of the US to other countries. And when we think about it, an ETF specifically, it's very interesting to like take a look at what happened in Brazil, for instance, after the Brazilian SEC approved the spot ETF, because it's not just access. Crypto is a new technology, is a new asset class that most institutional investors are afraid of. And the main reason why they're afraid of is because of lack of regulatory clarity. Okay, so once you get like a regulatory clarity, you get a stamp from the regulator that this product, this structure here is okay, and crypto is not, like Bitcoin is not a security and it's not for criminal, and traditional investors can allocate in this through this ETF here. This creates more inclination for institutional investors to start studying and taking it seriously. And this is what happened in Brazil. So after the ETF was approved, back in 2021, there was a huge success. I think it was the most successful ETF launch in the Brazilian history. And up until now, like that ETF, ticker #11, the Hashdex Nasdaq Crypto Index ETF is one of the most successful ETFs in Brazil. It attracted a lot of interest from traditional institutional investors, from investment banks, from traditional banks, from family offices, pension funds. All those investors, they started taking like a serious look into crypto because that ETF was available, and that created a pressure to the regulators to give more clarity. So then we saw like a new rules from the Brazilian SEC around like funds and how to invest in crypto, and putting crypto assets as a financial assets that those funds could invest in, and how they could invest. So give more regulatory clarity. We had a law passed in the Congress last year, also related to digital assets. We had the central bank working in a central bank digital currency that is based on the Ethereum blockchain. So now like all the banks in Brazil are integrating to that blockchain, starting testing out, and that will go live probably in 2025. And basically, so we get like the largest financial institutions in Brazil experimenting with Bitcoin custody, Bitcoin trading, offering ETFs, and also like tokenization, which is a huge avenue for the financial institutions in the coming year. So a lot of things have happened after an ETF was approved that was not related to only the access, only the on-ramp on Bitcoin specifically, or crypto as a whole, but really taking this regulatory, once you take this regulatory uncertainty out of the game, out of the equation, then you get real large financial institutions into the space, putting a lot of resources in, and that will accelerate the development of the crypto thesis.
You mentioned Ethereum, and I do want to talk a bit about the Ethereum ETF filings that have taken place over the last several weeks or so. And as I understand it, I actually haven't heard this directly, but someone had shared with me that evidently Chair Gensler this morning at the hearing said that Ethereum is not a security. So Samir, and actually this might be a bit of a two-part question, but Samir, for you, I think it'd be helpful with these Ethereum ETFs in the pipeline to maybe talk a little bit about the investment case for Ether, because a lot of us have been focused on the Bitcoin side of things. And then Cinthia, maybe if you could share some perspective on what you're hearing from advisors about crypto assets beyond Bitcoin and Ethereum specifically.
Great. So that's a great question, because like this year specifically, everyone's talking about Bitcoin because of the banking crisis we saw in the first semester, and then this Bitcoin spot ETF race that has been happening and has been accelerated after BlackRock filed and then GBTC lawsuit. So in mainstream media, everyone's talking about Bitcoin. No one is talking about Ethereum anymore. And this for me is a great opportunity, because if you look at the fundamentals, how the network has been developing, there are a lot of cool things happening on the Ethereum ecosystem. We've been seeing the infrastructure evolving a lot. And I wrote about this in the past, that we are in a broadband phase of crypto when you compare it to the internet. So we are in that phase where like the applications or the potential of the technology, we already showed to the society with DeFi, Web 3.0, like NFTs, but the technology is not ready to scale. It's not ready to reach billions of simultaneous users. And what is happening now in the Ethereum ecosystem with the migration to proof of stake, and now with the layer 2 solutions, is that those bottlenecks are being tackled. So we believe that starting at the end of next year, probably, we will have a very solid infrastructure that will be ready to onboard billions of users, simultaneous users, and that can be huge for the technology, for adoption. So it's a huge trigger for Ethereum. That's happening. Like Ether is not, stuck, and it's not like dormant. It's really active on the fundamental side. So this is a huge opportunity. And when you look again, like the largest financial institutions outside of the US probably are working with tokenization, right? So they're all exploring applications on tokenized securities, tokenized assets, how to bring real world assets to the blockchain, and then start integrating with DeFi. So we believe that once those applications start to reach scale, we could see another boom like we saw in 2017 with the ICO boom, when people like found out that like what you can do with tokens on Ethereum, what you can do with like smart contracts. It had a huge boom. And then in the summer of 2020, we had a DeFi summer, right? When people like the mainstream actually like found out about DeFi and what could that do. And we believe that after like we figure out the infrastructure side, which is happening and probably is going to be ready to scale next year, and all those tokenization applications come, we're going to see another boom, another possible like cycle in terms of adoption in smart contract technologies that is going to benefit Ethereum by a lot. So the investment thesis for Ethereum has never been stronger. And talking about asymmetry, no one is talking about this. So this makes the opportunity even more appealing.
Yeah, before Cinthia, turning over to you, I do remember seeing like last month or maybe 2 months ago at this point, Bank of America had put out a report saying something like over the next 5 to 15 years, tokenization could be a $16 trillion market. So I guess and maybe that's a good way to kick it over to you, Cinthia. Is that something, I mean, are advisors paying attention to these types of things, or is it really just not on their radars yet?
I think it's definitely getting on everybody's radar. I think right now, when it comes to the ETF race, it almost feels like we're already reaching for the next frontier, which is the Ethereum ETFs, before we even cross the original frontier, which is the spot Bitcoin ETF. So I think in the advisor plate is just like I'm barely digesting this race and fielding client questions. And now we're already talking about the next moving target. But I think just overall, there's a little bit of a separation where Bitcoin gets seen as, like you're investing in that asset. It's about that supply, demand, the price, where Ethereum is really a conversation more about technology, to Samir's point, is all about application, is about tokenization. So it's almost like it's more understood almost like as a tech play, more so than a digital asset play. But I think we're still in very, very early days in the advisory channel on this conversation about the potential for Ether and as an investment story. I think we gotta close the door on this Bitcoin thing first before we can jump to the next.
Yeah, that's Samir. Do you think that the Ether ETFs will face the same sort of fate and delays that Bitcoin ETFs have faced, or do you think they've kind of done the groundwork now with 10 plus years of these applications and people trying to get a Bitcoin ETF? Will it be faster the next time around for Ethereum?
Yeah, it's interesting because we don't have that clarity from the SEC, right? So we're going to have over the coming weeks. So there are some Ethereum futures applications that are supposed to go live starting mid next month. So I think that can be a big signal from the SEC that they're ready to approve spot, because approving the futures is the first natural step. Looks like they're going to approve. There was a big concern around whether the SEC would consider Ethereum a security. And we're learning as you go, right? So right now, just a few minutes ago, Chairman Gensler just represented on Congress that he doesn't think that Ethereum is a security. So that can be positive for getting the approval of the Ethereum futures, and then eventually getting the Ethereum spot applications approved. But like Cinthia said, let's get through this first phase, which is approving the spot Bitcoin ETF. The SEC normally they like to move slowly and step by step. So it's I think it's a natural process. They approve the Bitcoin futures, then they approve the Ether futures, then they approve Bitcoin spot. They see how the market reacts to that, how that's trading, and then they can approve a Ethereum spot.
And I guess with regard to both a potential spot Bitcoin ETF or a potential spot Ether ETF, I don't think there's been a lot of attention paid around the infrastructure needed to support those products. So can you talk about are the market makers and authorized participants kind of ready for this type of product, or is there more work that needs to be done around the infrastructure for a crypto ETF?
I'll kick that off and then I'll let Samir pitch in. But just last 2 weeks ago, I was at a conference in California, and we were talking on the sidelines about this exact question. And my understanding is this: no one is ready. The sense is, talking to a few market makers and stuff, is not as much as they don't know how this plumbing is going to work. It's really that nobody wants to be the first one to do it. The concern about the liability of the whole thing, the concern about, if you do a trade and somehow the Bitcoin is not there, or there's any kind of manipulation somewhere, from the conversations I've been having with these folks, this really is this, somebody wants somebody else to be first, and then they see how it all goes. So I'm sure that if we were to approve, what's beautiful about the ETF ecosystem is that we're all problem solvers. So we will figure it out. We will make it work. We're really good at making it happen. But I think, I don't know who's going to be the brave soul to go first and be the market maker, the AP, to really tackle this new requirement. What do you think, Samir? Yeah,
so first of all, for those of you that are not ETF nerds like we are, ETF there's a lot of things happening under the hood of an ETF. It's not just one ticker on the exchange that we can buy and sell. There are authorized participants, which are the financial institutions that could create and redeem shares, and then the market makers that would trade this ETF to make sure that the price that you see on the exchange is actually matching the net asset value of the ETF, right? So, and there's a lot of moving pieces to make this happen. For equities, this is a very well-solved problem, but for an asset class like crypto, this is still evolving, right? And that type of complexity, it's something that we already solved here in Brazil. So remember, like Hashdex have been running proper ETFs for a few years now. So we've been through this, we've been through those problems with the market makers, with the authorized participants, and we've been able to solve that pretty fast. But in the US, the structure may be more complicated, especially depending on the structure of the ETF, right? So in the application that we have proposed to the SEC, we would use the same model that is applied, like the Hashdex applies in other countries, which is the cash creation. So the authorized participant wouldn't need to handle crypto directly. Like that big bank in the Wall Street wouldn't have to touch Bitcoin. So that's a very simple process for them to integrate and for market makers to support. Other applications are proposing a model that we call in-kind, in which they deliver the actual Bitcoin to the fund to create shares, and they redeem Bitcoin from the funds to redeem shares. That model is tricky. It's more complicated because the plumbing is not there yet. So all the clearing and settlement infrastructure for selling Bitcoin in a regulated way is not like fully there yet. So, but I think, like you said, the market is going to figure that out. And it's just important to, like, it's important for investors to understand that once the SEC approves a spot Bitcoin ETF, that doesn't mean that the product will start trading in the next days. Depending on what they approve and which product they approve, that can be like a few months until you actually see a product trading, because there's all this all this infrastructure to be built and to be set up. And like those financial institutions, they will not touch it until they have the full regulatory clarity from the SEC that the SEC is not going to sue them, right? So it's something that, like, we need the SEC to approve first, and then they will start moving. That would take probably a few weeks, few months, and then we're going to see a spot ETF actually trading. So it really depends on the model. Like in the model that we have proposed, we could go live as soon as the SEC approves. Like the infrastructure is already there, the product's already trading, we already have like authorized participants and market makers that wouldn't have to change so much what they do now. So like it's a smooth transition. That's why we believe that this is the best approach, because it's a smooth transition. It's something that we're moving in small steps, small incremental steps, until we get like to the final step, instead of like going from 1 to 0 or 0 to 1.
The one thing I meant to kind of touch on earlier, but I don't want to get off the call without maybe talking a bit about the current investment case for Bitcoin, because I think, as I mentioned, we have a mix of folks on the webinar that I think some are more familiar with Bitcoin, some more familiar with traditional investment products. And so, Samir, if you don't mind, and we've got a handful of questions here that we can get to momentarily, but if you don't mind maybe talking about the current investment case for Bitcoin and what we see kind of going forward with Bitcoin specifically. Sure.
So, like, I like to call Bitcoin an emerging digital store of wealth, right? So it's the first time in history that we can have like a digital store of wealth, that we can have something that is scarce and is digital, and that's why it's emerging. And for being so new, there's still a lot of like there's no consensus on whether Bitcoin can be a good store of value, right? So if you ask like the big users of like value store, which are normally the big financial institutions and the central banks, if you ask them if Bitcoin is a good store of value, they'll say no, definitely it's not. So but Bitcoin has some characteristics that make it like as good as, or even better than traditional alternatives like gold and real estate specifically. So what we believe is going to happen, and that's our investment thesis, is that over the coming years and decades, as a generational shift comes and a new generation that is digital native, that is used to this concept of like having like their lives completely in the digital space, they're going to see Bitcoin, they're going to see more and more Bitcoin as a good alternative to those, like, I'll say, analogical or traditional value stores. And that will shift Bitcoin from being an emerging store of wealth, from being a consolidated store of wealth. So that's what we believe is going to happen over this next generational shift, over those next like 10 to 20 years. And if that happens, that means that volatility of Bitcoin will go down by a lot, but also that means that the adoption of Bitcoin will increase exponentially. And Bitcoin has a very limited supply. And that supply, the issuance or the inflation rate of this currency reduces by half every 4 years, right? So it's getting even more scarce. The current inflation rate of the Bitcoin network is already below the dollar. And after next year, when there is a new halving event happening probably in April, May of next year, that inflation will go down again, will be reduced by half and going to be smaller than gold, right? So Bitcoin will become even more scarce and its inflation rate will be smaller than gold. While like we've been seeing demand growing exponentially, and we believe we're going to continue to see that demand going up over the coming years. So a supply that is fixed and going down and a demand that is growing exponentially, like you can only imagine what would that cause in the price of Bitcoin. And that's our current investment thesis, right? So in order, and I get a lot of questions from investors, when can we see Bitcoin being actually used as a currency? When can I pay for coffee using Bitcoin? Because like people talk about Bitcoin being a currency, but we can actually use it's very expensive and inefficient to use. And in order to be a good currency, you need like a good store of value. You need a good like medium of transfer, like exchanging value, and you also need a unit of account, right? So those being a unit of account and a medium of transfer will only happen after Bitcoin is consolidated as a store of value. So that's the first step of like Bitcoin being used on our day-to-day. And that's really, to be honest, that's the step where the investment opportunity is, because after Bitcoin is consolidated as a store of value, it's going to be as boring as gold. You know, its volatility will go down and we won't see much big investment opportunity that we have now. So I'll say like Bitcoin will not go up forever, and this volatility will not stay that high forever, but that's probably going to take some, 5 to 15 years until the volatility goes down and then price start to find its equilibrium.
I think we've got a bunch of questions, so maybe I'll go ahead and start with those. The first one, let me actually, maybe for you, Cinthia, there's a question about the benefits of a crypto ETF versus directly investing it with an exchange or holding it through a wallet. Can you talk about that a bit?
Sure. I always go back to Samir's point about the next generation that are born in the digital age versus my generation that was not born in the digital age. When I first started dabbling into crypto, mostly as an educational exercise, I wanted to see how this whole thing worked. I got to tell you, it was not a process without friction. There was a lot of friction, a lot of steps to it, uncertainty. And to this day, I have some crypto on an exchange. I have some in a digital wallet. I don't fully know if it's always going to be there when I need it, and can I integrate it or not. And somewhere I have written a 12-word password I got to remember, which I never will. I'll take it to my grave because I already forgot it. And so it's a process that it's not, maybe it would be easy for my kids. I don't find it easy to access crypto. If you wanted to think of it as an investment that is part of an overall long-term portfolio. So the point about the ETFs is that then you can easily integrate into everything you own. So you have your classic 60-40, 60% equities, 40% fixed income. Say you have a long-term, diversified allocation, whether it's a retirement plan, whether it's, just some kind of long-term investment account. Crypto is this outlier asset here that actually most brokerage firms don't even allow you to trade in, that doesn't really get integrated. in an ETF wrapper, not only can be part of your overall portfolio, can sit in whatever sleeve of your portfolio you want, but you can actually have ETFs that own those Bitcoin ETFs as well, because there's such a thing as an ETF of ETFs. So all of a sudden, you can find access to crypto all over your portfolio in a way that today is this kind of outlier, separate account that most advisors can't even advise on because it's not accessible in the same way. So I'm a huge fan of the ETF structure for that reason. It really makes accessing, integrating. You can put it in model portfolios that you can really put in your retirement investments in a way that would be a lot easier than just doing it directly through an exchange.
And then just to complement for liquidity, if you think like all the hedge funds and all like the big traders, they normally use trading systems. They are very legacy, and they are designed to be integrated with the traditional market infrastructure, like the stock exchanges and the futures market. So like for those guys to trade a new asset class that's not listed as an ETF, it's very hard. They will need to like create a new infrastructure. And then there's all the concerns around regulatory clarity. So if you get like an ETF, a spot ETF available, there is an ISIN, there is, it can plug to all like the traditional execution frameworks that they have, so they can trade it, right? So that can bring a lot of liquidity to the ETF, which in the end will create liquidity in the underlying spot market. So I think this is also a very important point. It will take a few years until like the whole financial market infrastructure is ready to like handle crypto directly with all those like all the I'll say the particularities of crypto. So an ETF is a good way for like this first wave of adoption from institutional investors.
We've got a few questions, not surprisingly, about the SEC's decision-making process around the Bitcoin ETF. And Samir, the first one is, what do you make of the SEC's decision yesterday to file, that it would need until January 10th to rule on the 21 shares ARK Bitcoin ETF? So we mentioned that earlier, that they decided to delay, which was earlier than expected, that decision. So the question is around what you make of that decision.
Yeah, that was certainly like the SEC delaying until the like January the 10th, which is the latest that they can like delay this application, was expected. What wasn't expected is why they're doing this week, why they're doing now. And the reason is that the US government is probably shutting down starting next week, right? So there is whole discussion in the Congress around budget that is locking and putting the US government like in a very strange situation where they will need to shut down. So the agency will probably start working as of next Monday. Like the analysts will not get their paycheck, so they're not going to work. So what I think they're doing, and I can only speculate about this, is that they are putting this earlier before the government shuts down to make sure that there is clarity that nothing is going to happen like while the government is like in shutdown, and those applications cannot move forward, cannot be assumed as approved because the SEC hasn't taken any stance on it. So that's what I imagine that like they did, just to give a clarity that like if the government stays like shut down for a few weeks more until like the deadline that they would have, they wouldn't be able to issue an order either rejecting or approving or postponing. So they decided to do now. So that's what I imagine that happened, right? Specifically this week.
Yeah, we have a lot of problems in the US right now.
That's I'll just follow up very quickly because it's a related question, Samir, but about the Grayscale court win and whether or not the SEC appeals and how that would impact the potential for a spot approval eventually. Do you have thoughts on that? Again, I know it's all speculation, but interested in any thoughts you might have on that.
Yeah, so I'm not a legal expert, but like we still need to digest what would happen if the government is closed. right? While like the deadline passes. So would that be postponed, or the SEC needs to respond by a certain date? So I have no idea on the consequence of the shutdown of the US government on those timelines. But the SEC can either appeal, they can ask for a hearing of the same court, they can appeal to the Supreme Court, or they can just not appeal. And then, like, if they don't appeal, the court will issue an order, and that order will give clarity on what the SEC should do next. What, like, based on the conversations we've been having, what we believe is more likely is that the SEC will not appeal. Okay, they will just let it go through, and then the court will issue an order. That order, if the order is like you need to reanalyze and that filing, then the SEC is probably going to say, okay, like NYSE, Grayscale, update your application and refile. And then they will have 240 days more to analyze their application. And during that period, they can either approve or find new reasons to reject. And based on the conversations we've been having, this is the most likely path, that they're going to find new reasons to reject if they want. But the court can also issue an order saying, like, SEC, you need to approve, you have to approve this application. And in that case, like, the SEC will think about, like, if they want to appeal to the Supreme Court or if they just want to let it go through, right? So I think we're going to have a lot of clarity. I think it's October 15th, the deadline. So, and then 1 week more until we have the actual order. So in October, we're going to find out what's going to happen. So it's still too soon to really like nail down the consequence. But the most likely outcome is that this is going to be postponed for more 240 days.
Yeah, to add to that, internally, we're just talking about, we love to talk about uncharted territory, all these kind of cliche terms, but in truth, this is it. We've never been here before. We have no idea what happens next. But to Samir's point, I think the SEC at the current state of affairs, I think they're going to do whatever they can to buy themselves time. They're not ready to approve. Denial is getting them in trouble. So I think a delay is the winning tactic here. And they're going to take whatever path buys them more time to keep pushing this process until something gives. And whether it's political pressure, whether it's market pressure, something is going to have to change for them to move the needle here.
Yeah, I think if anyone thought it was going to be a boring fourth quarter in the world of crypto, I think they're going to be very disappointed. So and that's probably a pretty good place to wrap up. Let me just ask this one last question, since we do have a few minutes. This just came through, but the question, and Samir, you've talked about this in the past, is around CBDCs. And do you think that governments are concerned about, say, other crypto assets? They mentioned XRP here, threatening their state sovereignty. And I know Brazil has been kind of ahead of the curve in terms of developing a unique CBDC. And so I don't know, maybe if you just want to spend a minute or two talking about that and share any thoughts on
that's a great question. I think like the whole CBDC discussion has been accelerated because of crypto, because there are alternatives. And I don't think the government is necessarily worried too much about Bitcoin or Ether specifically, but they are very worried about stablecoins. Okay, so that is a big solution. It's a private, possible, like a type of private money that can be used and that can reach a huge scale. The big trigger, I don't know if you guys remember, but a few years ago, Facebook tried to launch a stable coin in a project called Libra. And that really like raised awareness and like all the lawmakers, the BIS and the US lawmakers, they were very concerned about like if Facebook launches a currency, a stable coin that can be used by billions of users outside of the US. And the consequences of that. So I would say they're probably worried about the relevance of their currency, and they know that the future is digital. They know that this is happening. So what I think they're trying to propose with the CBDC is a way for their currency to remain relevant, right, in the digital space. The Brazilian case is very interesting. What the Brazilian government is doing here with the CBDC project they call Real Digital, it's basically a blockchain infrastructure that is based on the Ethereum infrastructure in the like EVMs and is compatible with Ethereum. They will allow execution of smart contract and tokenization of assets. So it's a really interesting solution that they're proposing. And I think they're doing this like to keep its relevance, right? For some reason. And I think this is a gradual move. I know like us, like especially the crypto native, they tend to think that like crypto is going to replace all the like state sovereignty and they're going to like replace the dollar and all that. That may happen, but it's a gradual step. And it's a step, like it's a process that will need to happen in lockstep with the generational shift that I was talking lately. So the current lawmakers, the current regulators, the current central bankers, they're not ready for that type of move, you know, of open up their currency and going to Bitcoin. But like they may be in 50 years, but they're not ready now. We need a generational shift. So the first natural move is to have like permissioned blockchains where the government can control, where like financial institutions can interact in a regulated environment where we have KYC and all those things. And then you can start tokenizing traditional assets until we have a new financial backbone that is fully digital. And after we have that backbone, then the natural problem of interconnectivity, how you connect like the US blockchain with the Brazilian blockchain, with the European blockchain, that need will show up, and then like the public blockchains will be a natural step. So what I believe is going to happen in a really like long future is that like all those national blockchains are going to be just layer 2 on top of like a big smart contract platform like Ethereum. But you know, we need to move like in small incremental steps, and I think what the Brazilian government is doing here is really innovative.
Let's get that spot Bitcoin ETF first, and then we can worry about those bigger problems later on, right?
Hey, Gerry, before you wrap, I know you're not wrapping up. I just wanted to quickly say a quick congrats to you guys. I know we have in the industry-wide, the ETF Express Awards coming out, and Hashdex was nominated as one of the main crypto experts out there. You guys do an amazing job in the field with your research and strategies and everything. So I just wanted to quick congratulate on the nomination. It was well deserved.
Awesome. Thank you. And before we go to, if there are, for the ETF investors curious in crypto or other asset classes, Cinthia, where do you recommend they go to get more information on the think tank?
Well, first go to Hashdex. Then you can come to etfthinktank.com. We have a lot of research and it's all free to read. The data is free to play around with. So hit us and we're happy to help you out.
Awesome. Yeah, on our website, we have an insights section that has a lot of useful information. Samir's got a new article coming out tomorrow on the investment case for Ethereum. So I think we encourage everyone to visit that site. And again, thank you both for a great conversation. We're ending 2 minutes early, which is something I always love to do. So appreciate it. Thanks, everyone.
Thank you so much. Thanks for having me.
Take care.
Ciao.